Hey everyone, it's Ryan with Stock Market Trading Live. Today we're going to be doing my weekly portfolio update. Last week I was talking about my strategy with you guys. I told you guys I was deleveraging my portfolio, building cash, and preparing to buy high quality stocks if the market continued to go down because the market kind of correction, I guess, was starting at that point. And sure enough, during this past trading week, stocks did continue to go down, and I took advantage. I stuck to my strategy. I decided to buy some high-quality names. We ended the week relatively flat, not really a big gain or a big loss. However, for a red week in the market, we performed pretty decently. And also, if you factor in my other portfolio, which consists of only hedges, which make money when the stock market goes down. Overall, I ended the week positive across all of my portfolios, but I think it's safe to say it was a relatively flat week, no real big gains or big losses. So first, let's show you guys all of my stock positions. I have some old stocks, and I have a lot of new stocks that I picked up during this past week. I'm trying to pick my stocks wisely and also pick high quality names. First, let's start with my stocks that I was already holding. These are stocks that I'm holding and collecting dividends on. At the same time, I'm selling covered calls, taking in premium every single week or every single month. And this way I can generate income while I let my growth stocks do their thing. I let my dividend stocks do their thing. That way I can get kind of the best of both worlds. So those stocks are AT&T, MJ, Cedar Fair, GE, Kinder Morgan, BTI, which is British American Tobacco, SH, which is a short. This is one of my few hedges. It's a short S&P 500 ETF. After that, we have some new stocks. So the stocks that I've actually recently been buying have mainly been growth stocks, technology, and some of just the mega cap tech names that everyone knows. But I have been picking up some kind of value and dividend stocks at the same time. So of course, we picked up 7 shares of Microsoft. Microsoft is one of my favorite stocks in the market. It's down to $203 per share from over $220. Currently, average cost is about $209, so I want to get that lower. Hopefully, we can get that to around the $200 price point if stocks continue to go lower. After that, we have AbbVie, which is a nice, solid dividend stock. It's at the $90 price point, which was what our average cost is, $90 per share, yielding over 5%. So as you guys can see, we have the tech stocks like Microsoft, but we also have those sweet dividends like AbbVie, AT&T, Cedar Fair, stuff like that. We picked up some Spotify, Tesla. We have 2.5 shares of Tesla. Intel, I recently took full profit on my last covered call. So in my video last week, I showed you guys my covered call. We took in a $42 premium. Well, I ended up closing that position for just $3. It was actually going to expire worthless, but I decided I'll pay the $3 to close it out, and I'll sell another one. So I rolled out my option. I took in a $64 credit this week, which is about 1.5%. So that's a pretty decent return on a covered call. At this point, it doesn't matter if it gets assigned or it expires to me. If it gets assigned, we've made plenty of profit. If it expires, well, we'll make another, almost 2 shares. We can put that towards more shares of something else, and we can continue this snowball effect. So after that, we have some kind of fractional positions. We have Teladoc, Rocket Mortgages, AMD, General Mills, ConAgra. So we've been picking up more shares of Campbell Soup and ConAgra. Campbell Soup dipped pretty heavily on their earnings. You see this huge red candle. It's down to $45 per share. Before this crash, it was actually having a pretty decent year, and now it's back in the red for the year. It's yielding over 3%. And, this is just a big kind of correction, so I decided I'll buy some shares. Have an average cost currently of $47 per share. We have ConAgra Brands, which is kind of in a similar position. It hasn't been as big of a crash, but it actually was performing better than Campbell's before the crash. So I'm picking up some ConAgra Brands. It's also got a nice 2.5% dividend yield. And these are just kind of some safety stocks. I like to have a lot of safety at the same time as I have my Microsoft, my Tesla, my Apple, all of those big growth names. So after that, we have Pfizer, Pepsi, PayPal, J&J, Visa, Amazon, Apple. We have 12 shares of Apple. The average cost we currently have is a little high at $119 per share. The average cost right now, or the current share price, is $112. So if it does get closer to that $100 price point, I'll probably pick up about 100 more shares. But at this point, I'm going to slowly average in unless it makes a big move down. We also have MasterCard, Shopify, Kroger, Chevron, Square, Google. A lot of fractional shares that I just read off quickly. They're pretty small parts of my portfolio. They're just fractional shares, but I think there are a lot of strong names, a lot of names that I'm sure everyone is familiar with. We also have Sony, so it's a new generation PlayStation year. I have a lot of hopes for Sony. They're also talking about releasing electric vehicles, so it's also been a pretty good performing company. A very beautiful chart looking at the past 5 years. Sony has been, an excellent growth company. So I've been kind of trying to take advantage of this very small dip that it had here, picking up some Sony shares. I think with the release of PS5, the release of electric vehicles, and the continued growth that it's already having, I think Sony is going to continue to grow. After that, we have Adobe, Palo Alto Networks. This is a great stock. Tractor Supply, EA. I've been picking up a lot of gaming names like EA, Take-Two Interactive, Activision. We also have Kimberly-Clark, eBay, Lulu, and Chewy. So these are all of our stock holdings. I know it was a lot of holdings. Like I said, a lot of them are fractional, smaller holdings. Let's get into the options holdings, finish this video out, and show you guys where I'm at with my options. So currently, we sold a bunch of calls that are actually expiring this week on Intel, BTI, SH, Cedar Fair, MJ. After that, we have long spreads on UVXY and short spreads on Chipotle, Starbucks, McDonald's, Leaps, Space Leaps on calls, and Kronos Leaps with a $6 strike price. So it's a mix between kind of long-term options that I bought and short-term options that I'm selling for a premium. And a lot of these longer-term options are kind of hedges, or I'm just buying puts on stocks that I think are overextended. We've seen crazy rallies in some of these stocks, and I'm just looking to pick up some puts for cheap, and if they expire worthless, so be it. If they make profit, that's awesome as well. So that's the portfolio, guys. You've seen kind of how everything played out and how the returns, my current positions. I think I'm still ready to buy stocks. I have cash ready on the sidelines. I think that's the most important thing, to have cash ready, to be ready if stocks go up, if stocks go down. It really shouldn't matter. You shouldn't be overly leveraged in one direction or the other. So that's my video, guys. That's my game plan. I'm going to stick to the strategy. We'll see what kind of returns we get next week. Don't forget to smash that like button, subscribe to the channel, comment below if you want to enter our 1,000 subscriber giveaway. The winner will be announced at the end of the month for a $50 Visa gift card. As always, guys, thanks for watching the video. We'll talk to you guys soon, and